Okay, here we go. Let's get into it. Bitcoin. The old Bitcoin. All right, so going back to when we first looked at this neckline, I think I deleted it maybe last stream, but I meant to bring it back. I didn't mean to permanently delete it. Um, this neckline has a measured move and a fib extension, like we were talking about before. Fib extension, see the 1618, is from the lows of the move to this high, which we considered the neckline going forward. So about this point, we had 1-2 touches, and after about that point, you could say, okay, the neckline's right here, and not a specific, like a perfect level, but even if you had it about there, roughly you're looking for a fib extension move up in here. So we've been talking about that going back to July 5th. I'm going to be honest, it's not like I've had a ton of faith in it happening, but we want to identify it and just see what happens, right? That's why we do this. So since then, we had this parabolic uptrend. You can see with the lows, higher low, and we've still not made a lower low. So there's been some people, I've seen some tweets like, no, you just bend it and there we go. I don't know. I don't love doing that. The last time we looked at this, the chart looked about like that. And so it's like, how many times are you going to bend the parabolic trend? Like, are you going to keep trend fitting it every time it goes down? I don't know. So I don't love just moving it. At some point, you got to call it. And I'm pretty close to that. So what I'm looking at now, and I think this would be very interesting. Okay. Very interesting. What if we end up doing this rising wedge into this zone? This is like what often becomes the sell zone for moves. So what if this turns into something like this and then ultimately breaks down, either retest the lows or worse, right? But something like this, you got to remember, we're only about 50 days in since this low. Let's measure it real quick. I think that's last time I looked at it. I think that's what it was. Yeah, we're 50 days and 4 hours as of right now, as of this candle, since the low. And if you want to measure from the point we entered this range, we're 55 days in. So is that enough for a bear market bottom? I really don't think so. It just makes way more sense to me for one of two things to happen. Either this thing breaks and continues down, and just like this cascaded down, maybe perhaps we do something like that. I'm not like super sold on that. I think it's possible. It's absolutely realistic to look for something like that. That's why I'm a big proponent of DCAing only right now, and not looking for big sweaty margin positions unless you're super confident in some type of move. But the other thing that we want to keep in mind is there's no shame in something like this playing out. Let's remove everything. No shame in something like this. Boy, what would that look like? Huh? Now, obviously, this is the kind of structure, market structure, that would give market participants a ton of confidence in entering big sweaty multi-year longs. This is the kind of thing we'd want to see. However, the only thing, like if I had to be nitpicky, this is a very short period of time. Going from June to September or June to October, we're only talking about 3 to 4 months. Really, for these kind of patterns to have a lot of significant impact, you want to see it like 8 months. Typically there's longer, up to a year. But let's just see how it plays out in the lower time frame. This is kind of what I'm keeping my eye on. But yeah, some kind of W bottom on the macro. Hey, take that all day, and then that would give you a really high degree of confidence that, hey, we're probably bottoming out. But like I said, the only missing ingredient, if we're cooking up like the bottom pie, the perfect little schematic of what a bottom might look like, the only missing ingredient is time. Time is the only thing that we don't really have on our side right now. If we go back and we look at the BLX, which is the history of Bitcoin price action over the last 10 years or so, we can see that every halving has been a really explosive period of time. This is when each bull run takes off. So you have a halving, you have a bull run, you have a halving, you have a bull run. We're really far away from the next halving. Doesn't mean we can't kind of meme around and do whatever. Absolutely not. But if you look back at, say, 2014 to 2015 and then into 2016, there was a lot of little fake outs along the way. So these are really, anywhere in this like kind of middle area zone is a really tough area to trade. You're almost always going to get chopped up. So keeping my eye on this, but with respect to the last bear market and how we bottomed out there, this lasted about what did we measure? 120 days, I think it was. We're on 3-day candles, so it may not look like much visually, but each candle represents 3 full days. So let's say from the breakdown to the breakup, yeah, almost 130 days. And by comparison, from this breakdown, we're only about 50 days in. So we're roughly 30% of the way through this, like how that bottom played out. We're only about 30% of the time through that by comparison. So I'm not like, hey, it's moon time, everybody risk on, let's go, that kind of thing. But we are in that zone where you should be dollar cost averaging in if you have any faith in Bitcoin on the long term at all. So this rising wedge is still a pretty good little target, especially after the breakdown. We see this a lot. We have a parabolic trend easily identified, eventually a breakdown, but then some sort of retest, you know, call it a 3 pushes to a high. This is a very common thing. So if you imagine inside of a rising wedge, you know, oftentimes there's 3 touches before a breakdown. And you can actually Google 3 pushes to a high. This is the idea. I'm tired of hunting for it on the pattern side. It's there. I know I've read it there before. But they talk about this a lot. So this is, you know, I often talk about how big major moves that's going to set the tone for the next like 30 to 45 days are moves that people are going to see across multiple schools of trading. So like the Elliott wave guys, you know, even though they're like the poor people with the signs on the side of the street, like even they will see this next move. Lol. Love you, Elliott wave guys, kind of. And then, you know, the Wyckoff guys will have their day in the sun. They'll see whatever it is they see. And then the pattern only guys who are like, oh, that's a rising wedge. That's exactly what that is. And then there's the guys who are like, oh, 3 pushes to a high. So you start checking off multiple schools of trading and they all kind of say we're doing that. Then oftentimes that's what happens. Here's another way to view this parabolic uptrend. I think by all accounts, this thing's been broken pretty aggressively. Again, if we come back to this, like, I wonder if this a little bit of a rising wedge. And we're talking about a rising wedge here, remember, because there is a diagonal being respected. Like, I'm not just making that up. There is a diagonal being respected. But prior to this like diagonal trend line, prior to that, there was a parabolic trend being respected. So you've gone from this to this, and eventually there's going to be, you know, so price does this, and then it does this, and then ultimately it breaks down to some level, whether it's like a retrace to the lows, that's what I'm talking about, would make for an interesting double bottom setup, or like some kind of macro Wyckoff range, you know, where like it comes back down and then comes up, something like that. These are all setups for really interesting continuations, like the next step. But this little rising wedge here after the breach of the parabolic uptrend has me a little bit like, interesting. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for, and nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.